All right, let's get started. I'm Max Rybinski from Central Trading Academy. I'm excited to be here at Futures Forward. And today, my platform usually engages people a little bit more with interaction. So I am going to be calling somebody up here to give me a hand. We're going to build the strategy together, and then we're going to trade it. But not only am I going to demonstrate it, but somebody here is going to trade it up here too. So Central Trading Academy works a lot with universities to provide free training. We hold hosting competitions for trading as well. But we also have a prime technology, and we're working with JM Technology to bring that to the market. So we're really good at what we do. I'm a trader as well. You can watch me trade every single night live in the US markets. I actually favor the CME product for NASDAQ. But we are going to show how to select stocks, how to screen them. For those of you who are quants, you can take a few notes down to see what kind of strategies I use to select which symbols should be added to trade. And then afterwards, how to use simple trading technologies or simple trading foundations to really make a difference to your bottom line. So we're going to get started. First, we're going to discuss analysis, strategy development. I'm being really serious. I have a very short period of time. I didn't start my climber here. To build a strategy, we're going to go through the stock screeners, talk about trading foundations. We're going to build an algo together. And then I'm going to show you how to use it, and then you're going to trade it. And hopefully it will do well. It won't bomb too bad. All right, so first up, it doesn't matter what kind of a trader you are as long as you're consistently profitable. A lot of people tell you that trading is easy, and it is. You can push a few buttons, but doesn't mean you're going to be always profitable. So to do that, I'm going to give you some tips that really, when working with clients here in Hong Kong, really do improve their performance. So there's typically two styles of analysis, fundamental and technical. Everybody understands this. But there's some kind of a mutual hate, for some reason, against each other. And I always find that quite ridiculous. So I'm a fundamental trader. I'm looking for value. I'm a technical analyst. I'm a chartist. And then all of a sudden, you get them in a room, and it's a catfight. But really, the idea is if you marry both of them, you increase your edge for performance. You need both. And everything is an analysis of the current price. So let's quickly start. Strategy development is actually rather easy. First thing I do when I pick equities, I look at liquidity. That's the first list for any fundamentalist or quants. And we're going to apply this particular screener that's going to be from Nifty, NYSE, Nikkei, every market in between. So this is going to give you a massive list. First thing you want to do is look at 1 million trade volume. That's the first thing. You want to be in a position that you're not going to get stuck if you're trying to get out. But it has to be at least a 3-month average. The next thing you want to look at is beta. You can take pictures. I'm getting excited. This guy's taking notes. You have to take a beta that's slightly increased. I'm interested in stocks that are actually going to move. So if the market is going to be adjusting to the upside, I want my stock, whatever I selected, to actually move slightly more than that. The next thing I want to do is look at financial strength. Financial strength is extremely important. I want to validate the financial integrity of the stock. Now, I don't need to hire a forensic accountant to do that. All I have to use are 3 things: M, Z, and F. I almost forgot that for a second. I'm saying Z because I'm Canadian. Any Canucks in here? Oh, yes! You have to show me where to go for poutine. I'm really, really craving for that. But all right, so let's get started with M. M stands for the Bayesian M-score. And what that does is when I'm looking at global markets and literally every equity from Nifty to NYSE to anything, CAC, back home to Toronto TSX, I'm looking for a Bayesian M-score which helps me identify any particular manipulation in the reporting. I want to work with qualified companies that have some integrity. Anything that makes that list, it's out. Following that, I want to look at the Altman Z-score. We heard Mr. Fox mention that about how some companies have to be looking at the resilience of it. So it's like a stress test. You're basically providing them a financial stress test. What is the likelihood of this company trying to foreclose in the next 6 months? You want to find solid names. And last is the Petrosky F-score. That one is the creme. It allows you to identify stocks that are operating well, really financially strong, and now your list has really shortened down. And anything above a 7 score is good, if anyone's taking those notes. All right, so once we've done that, we want to apply value, and Hong Kong is the value hub of Asia. I don't need to discuss too many strategies on how to identify value, but we're going to just apply a simple one. Price to book, price to market, EPS growth for the last 3 reports. That's more than enough. Now, what you've just got is liquidity, something that moves better than the market. You also have financial strength. You qualified that without having to have a massive team to do it. These screeners can be easily identified using your Bloomberg terminal. So that really makes it simple for that too. And then lastly, we've identified some value. Please don't be one of those portfolio managers that says position sizing, sector weighting, add to portfolio, because this is only 50% of the equation. Now we actually have to put them into trade. Now, I've worked for the industry for 15 years, and I'm very passionate about it, so I hope you can hear that. And I've spent so many years with so many different traders, hundreds. And I've seen the best traders, and there's very few of them, and a lot of traders who've horribly failed. And there's some consistencies, very simple consistencies, in traders who are consistently profitable, coming back year after year, making an actual earning, versus traders who fail, and they have similarities. So we're going to talk about them now, and how to take that list that we just discussed, and then bring it into trade. Trading foundations happens to be in reliance of understanding where you are in the developing trend. So most of you guys here have either CPA, CFAs. Some of you guys are licensed and took your HKSI exam. So I love asking the question to the audience, how many points do you need? We have eye contact. So how many points do you need to define a trend? Just give me a number. 1,000. All right. Let's give somebody else a try. How about you? Give me a number. Similar. My God, this is failing horribly. You only need 2 points. 2 points, but 2 very special points. Not 1,000, but very good shot. What happens is you need 2 consecutive higher highs and higher lows to define an uptrend. You need 2 consecutive lower highs. Did I say that right? Higher highs, higher lows for uptrend, lower lows, lower highs for downtrend. Now, why that matters is you actually can only determine if the developing trend on the second point. Every time I've seen a strategy or optimized some of the companies here on your strategies, they don't have that on their top condition of strategy list, nor do they have it in their quant strategy. I don't understand why. Typically, that's the one thing I have to do to greatly increase your performance. Write that down, put it into your market, because that's the whole reason why you're here today, something that you can apply tomorrow. So how does that look? I have this cool little animation that starts dropping lines. And that's telling you where, on higher lows and higher highs, where you're supposed to be buying. So on lower highs, you're selling. On higher lows, you're buying. If you cannot identify this, please don't trade. I'm begging you. You will hurt yourself. Don't trade if you can't identify the lower highs or higher lows. That's the first most important foundation you need to know about trading. Taking a position, you need to identify this. You can't, I will never let you trade my money. All right, let's move on to the next phase. Harmonic ranges. I'm actually sharing you something that I love, and it's very secret. Larry Pesavento let me mentor with him, and he actually guided me to understanding harmonic ranges. This was one of the most hated research studies I've ever had to do, but I thank him for it every single day. Harmonic ranges simply identifies trader behavior. When you are adding to your position, adjusting your position, traders make these tiny little adjustments and movements that are then visible based on what they're doing in the market. Now that means, I gotta keep an eye on my watch. What that means is I can actually capitalize by understanding what the harmonic range looks like. It's easier to see on a price chart. There are different data series, volume, tick, price, bar, time bars. Most of you guys are using time bars, but try using a price bar because it makes a big difference. And there goes my animation again. So I actually copied this. This is the NASDAQ chart. So this is the NQ futures that allows me to see that it has an average move of 30 ticks. If I know that the average move of 30 ticks when traders either adjust their positions, take money, make money, whatever they're doing in the market, and I know it's 30, what would my target be? If I'm trying to get money out of the market, I take a position, where should I adjust my position? Where would my target be? Give me a number, if you know it's 30.
30, yeah, my astrology chart says 30.
All right. According to astrology, I will never discredit your trading strategies. I know a guy that made money studying weather patterns. So if you're doing astrology, that's pretty cool. But if you're going for 30, that's actually the wrong answer. Because what happens is it's highly improbable for you to get in at the exact low, the exact high, so you must stay within your range. My rule of thumb is 2/3. So if it's 30, I'm going for 20 ticks. I'm very quick in the market. My average trade can be anywhere from 15 seconds to 7 minutes. And I'm happy to do that. Brokers love me because each night I can take, on a slow night, 20 trades. On a good night, above 50. And I'm happy with taking about 75 ticks out of the market net. That's my trading. And I'm not even lying. You can come see me for free, and I trade a lot. I'm in my trading room every single night helping traders, helping university students understand how to build qualified trading techniques. So this is the most important thing you need to add to your strategy when you are trading. Realistic targets. A lot of people tell me, well, how about the value target that we looked at fundamentals? That's great. If you have a 100-point increase in value over the lifespan of your actual trade, why not trade within the trader behavior and maybe be able to capitalize an additional 50% of that move? All right. So now we just discussed that. Let's look at the trading foundations, some things that you should also consider. And I really feel foolish actually mentioning this, but it needs to be said. When you're buying, please buy on a positive candle. I can't say green in Asia. I found out that's a down candle. It's supposed to be red. So I just call it positive candle. If you're buying, buy on a positive candle. If you're selling, sell on a negative candle. That's something that should be considered, as well as remember how I mentioned the beta. So when you are selecting stocks or whatever you're trading, when you are looking at beta, you have to follow the market trend. Identify if you're entering on a lower high or higher low, making sure that when you're entering your equity position, it follows along the market of the underlying indice. All right. Now we get to the fun stuff. Keeping it simple. Algos don't have to be very difficult. It could be very simplistic, and usually those are the ones that give you the best opportunities. Trading requires some skill, so you need to practice it, and once you do, you're then able to add algorithms or indicators, merge them together to help you identify signals more clearly. I love bands, but they've been absolutely misused. I have stronger words, but I'm not allowed to say it on Bloomberg. All right, so I developed something called max bands. When you're looking at bands, for some reason, later on in the 90s, people decided that once you have penetration outside the band, it reverses back to the mean. Don't do that. It's a moving average with an envelope. So all you have to do is when the price is above the center line, you're in a bullish market. If the price is below the center line, you're in a bearish market. Look for selling opportunities. Don't look for the penetration points. I'm not discrediting if it works for you, but keeping it simple just simply means use it the way it was meant to be. William Bollinger actually wrote that in his original document. When you do your research, why not use it correctly? Now, I spend a lot of time. This is where I get to selflessly saying this is my little tool, and I called everything max. Max bands, max momentum, max everything. That's when I was in my early 20s. I feel foolish saying it now that I'm almost 40. But let's move on. Now we're going to add max momentum. Max momentum is an oscillator. Oscillators are also widely misused, but oscillators just simply help you identify the speed of price change. Don't make it look for overbought and oversold levels. If you're using stochastics, try this for you quant guys. Try this when the price is validated with a cross above the 50, rising above the 50. Look for price change that will actually increase to the upside. Look for longs. If it's actually falling below 50, you want to be looking for shorts. All right. Now that we have this, we have to develop some strategy rules. 2 indicators, 1 band, 1 oscillator. One thing defines the speed of price change. One helps you identify where you are in the trend. Either you're in bullish or bearish, we should be considering that. So now we have to come up with the rules. Our rules are very simple. They just need to sync. So if you have all green and your crossover or the price is above the center line, buy. If it's all red in your oscillator, which means it's all falling, and you have the price point below the center line, sell. So now we're going to put this to the test. Now, Mark pulled something on me today coming here. He's the guy who put this event together with his team. He's doing an awesome job, and Bloomberg is pretty cool to be up here. But he said, no equities, we're going to be doing some futures. So I love futures because I trade that. Oh, and the CME lady's looking at me smiling. And what happens is I actually prepared some data that I pulled. It's reconstructed tick data. So when we're going to be trading, this is why I need this mic. One of you lovely people are going to come up here and trade. Please don't do well. It makes me look better. And what we're going to do is we're going to just take some simple trades. Now this is reconstructing at 10 times the speed. Am I past my time? Oh, we still got lots of time. 5 minutes. So all we have to do is identify higher highs and higher lows. Right now we have a sink. I should be buying. Once I enter my position, the computer automatically determines where the range is. All I have to do is walk away and consider it and hope, what happened to my trade? Oh, it actually made money, and we didn't get to see it. I swear, I didn't lie. You know what? Let me help you here. I think I understand. There we go. Do we get to see it now? Oh, brilliant. All right, so you saw, I'm not going to do this again. I need to do it again. So I entered my position on a higher high and a higher low. So we have consecutive higher lows, another higher low. I enter my position. My computer automatically determines where my target should be based on the range. And the price point that I entered was above the center line. Oscillators were green. Keeping it simple, I can take these type of trades, especially on NASDAQ. I love that particular futures because, again, it's the only one that allows me to trade up to 50 times on one instrument per night, and I sit in front of my computer after this for about 2 hours, 3 hours. So we're going to do that again because you didn't see it. And then what we're going to do is we're going to ask somebody to come here. There we go. We got another pullback. We enter the position. We allow the computer to go and reach our original target. It hit target 1. It's now retracing. And it hit my adjusted stop. All right. So anyone with any trading experience? First person to look at me. I am looking for a lady. Oh, my God. Yes, you. Thank you so very much. Oh, she looks away. No, I'm talking to you. Can you come up here? Yes. What's your name? Suzanne. Everyone, please. This is tough. Give her a big round of applause for Suzanne. She's coming up here to give us a trade. Come on. All right. What you're going to do is I want you to push buy anytime you see the market and then enter. All right?
Every time you see the market?
Whenever you feel that you're ready to push buy, after we just discussed the algo, I hope she was paying attention.
Okay.
And then what you want to do is just hit enter. And I'll enter the trade and do everything else for you.
Okay.
Are you ready? Get ready. Do it now. Do it. Beautiful. She did it all on her own. All right. Do it again. No, you can't walk away. Now, take 2 more trades. You have to push enter. Whenever you see it, it's a double verification. Yeah? Get ready. You can... No. Now it's no longer... You're doing great. Don't worry. We'll slow down the market. How about only 4 times? Get ready? You can do it. Yep. Beautiful. Thanks. All right. No, keep going. I'm going to talk. I'm actually cheating right now. Women make better traders than men. That's why I always ask them to come up on stage. I'm not even lying. Men will typically make more money and lose more money, but women seem to be more consistent. And it's not really fair for me to say that. Out of so many years of trading with different industries, different firms, I've probably come across over 150 traders, and I can probably count on 2 hands how many women were actually on the floor. So, but they've always outperformed the males. So that was always fun. But you can now leave. You're doing great. You can now look for shorts. So let's give her a hand. If it's now making a lower low, we're waiting for it to come down. Very good. Now wait for that pullback. Put your mouse over, sell, and hit enter right now. Yeah? And enter. All right. We got a little bit slipped there. Nicey does that. You can do it one more time. They'll give you another opportunity right here. Wait till it turns black. Oh, you did even better. Look at you. All right. So the point that I'm trying to make is anyone can actually trade as long as you have good tools, good system, and you have some experience. She just took 3 trades, and did she make any money? You're down $40. All right, everyone, let's give her a big round of applause. Thank you to Susan. Thank you so much. All right, so just to finish off the main point, I love what I do. I've dedicated my life to it. Working with LM, we're able to bring technology out to anyone. If you have talent, you can try our simulator. And then on top of that, we make it easy to connect to CME Futures. That's where you actually live in our simulators. And then if you do well, you trade with our funds. So that's always fun. But it is something that we've designed for universities and local in HK. Now, when it comes to trading, trading systems don't have to be difficult, and you do whatever works for you. If somebody, exactly what Benjamin said earlier, if you are a trader that looks and focuses on value in the long term, know how to apply good screeners and good executions. And remember today, if you can bring back and apply it tomorrow, what you want to do is you want to focus on knowing what your range is so you hit your targets more. And you also want to focus on where you're entering your developing trend. That's really going to increase your success rate. This was a lot of fun, and thanks for having me, guys, here from Bloomberg. And thank you to Susan for doing an awesome job. All right, have a good night.